Hello, investors. It's Don Vandenbord, Chief Investment Officer and Senior Portfolio Manager at Revere Asset Management. Today is Tuesday, July 20th, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in a bifurcation, but possibly some light at the end of the tunnel that isn't a train after today's action. We'll dive into that shortly. Check over here at the trend gauge. We're still showing leadership in an uptrend. As we go through some charts shortly, you'll see why we actually had the arrow pointing towards neutral back to the black arrow, which means we're firm where we are after the action in today's market. It'll remain to be seen whether or not this was a dead cat oversold bounce or if this is something to build off of. As always, we don't predict here. We interpret, we observe, interpret, and react. And that's always how it will be here at Revere. So as far as the three time frames that we invest over based on the strength of the averages, we're still at neutral on our short term. This means how are the five major indexes positioned? Neutral, but really it's a bifurcated neutral. We've got strength in the large caps and weakness in mid and small caps. Same situation over the 50-day moving average. But we did change the arrow from yellow as we were weakening to back to green based on today's bounce. But again, we need more follow through to the upside if we're going to continue to either get back to the bullish uptrend. At a minimum, we need two closes above the short-term 21-day moving average in order to move the arrow. Long-term, we're fine since July of last year, firmly above the 200-day moving average there. The key, however, is leadership. That's always what we're looking for, and we're in good shape there. As far as I'm concerned anyway, we got exactly what we were looking for, what we asked for from the leadership stocks in our portfolio, and as long as they're acting fine, we're going to take that evidence and we're going to stick to our stops, of course, but we held where we needed to right now. We were down at the close yesterday to less than a 2% until our stops would have gotten taken out. That's increased to about 4% now after today's strong bounce and strong action and leadership. So what just happened today? Strong bounce across all the indexes. S&P 500 up 1.5%, NASDAQ up 1.2%, Dow up 1.6%. The beleaguered mid and small caps, very strong, mid up 2.7%. Russell up 3%. Big bounce in banks and oils, which had been really destroyed to the downside. Industrials too, with a nice bounce. We'll take a look at some key charts momentarily. Let's get to the charts. First, let's get to the guys running Revere. This is on our soon-to-be revamped website. If you're looking for an active manager that takes a step back, takes a look at what's going on with the market, takes a look at what's going on with the individual sectors within that market, and then the leading stocks within those sectors, and funnels our money appropriately to those and your money. That's the way. It's a common sense approach. You don't go outside without an umbrella if it's going to rain. If your check engine soon light comes on in your car, you don't ignore it. That's the way we play the markets too. As long as the markets are healthy, we want to be participating. If they start showing signs of weakness, we take appropriate action. Fully transparent. We're a fiduciary. Video content 6 nights a week. And if you want more information, give us a shout. You can email any of us. America's Fiduciary, Dan Stewart, fields the phone calls. But you can email any of us, Dan, Tim, Hunter, Alex, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Let's look at the Fear and Greed Index very quickly. This was a 17 or an 18 yesterday, up to a 20, still over extreme fear. Yesterday, the put call index got above 1, and the VIX was up 32%. So anybody saying there's complacency in the market, those numbers do not support that. So yesterday's and Hunter made this very clear in the videos, while the indices were very weak on Monday, individual stocks were much stronger than the index. Our stops didn't get triggered on our last 5, 6, 7 positions. Our index positions held where they needed to, and we added some things back that we did take a stop on. And as of right now, we're content with where the market is, and we're adding exposure. But again, yesterday's lows are an extremely key level. That's really where our stops are across the board on our individual positions, as well as our NASDAQ and our S&P 500 leveraged index longs. So let's get to the charts here. We'll start off with the S&P 500. Let me blow this up quickly. So you can see here, brief undercut. This undercut brought us to break even on some of the index longs that we added back here. So we sold those with a very minor gain. Didn't want to go negative on something that we had a gain on, but added half of that back today, and also added a NASDAQ 100 long yesterday via the QLD, since tech stocks are acting stronger. We're acting stronger and holding up much better yesterday. But the S&P 500 couldn't have done much more than we'd asked it for after a tough day yesterday. Key thing number one, NASDAQ 100, S&P 500 held at the 50-day. Key thing number two, the QQQ, the NASDAQ 100, held at the 21. And then today we had a small gap up, but just strength all day, relentless strength, grinding higher, getting back above the 21 on the S&P 500 and further off of the 21 on the NASDAQ 100. Let's take a look at that right now. Here's the QQQ. You can see here the undercut of the 21 and the close right on the 21, and follow through strength today. When this gap down yesterday and it was holding right on the 21 is when we put the QLD on, and then as weakness continued and we broke that level, we sold some of our SSO, as I mentioned, but added half of that SSO back today, and we're still holding this QQQ, and the stop will be below yesterday's low. But this is good action, not only off the 21, but reclaiming and closing right above the short-term ADMA. You can see how the ADMA really held this entire run until Friday's close below the 8, and then close right on the 21 on Monday, but the strong bounce off. So now the question is, was this a dead cat bounce? We've reclaimed a little less than half of this, or about half of this 4-day pullback. So we're going to keep an eye now on what happens going forward from here. We've got our levels. We know what we're going to do regardless. Let's take a look at the Dow Jones Industrial Average, which really got slammed to the downside on Monday. But look at this nice recovery, reclaiming the 50 and sitting right on the 21. Taking back losses, that you can't ask for more than that after 2 harsh days down off of all-time highs on the Dow Jones Industrial Average. Now let's look at the indexes that really have been lagging. Here's the mid cap, first of all, breaking the low of the range, but it turns out it's just an undercut and recover, which is bullish. And back above the 8, we do not have the moving averages looking good in any way, shape, or form here. We're right above the downtrending 8. We've got a downtrending 21 and a downtrending 50. So we've got some work to do to repair those. Not only the averages, but it's the only thing that'll do that is time and price action. So we'll see what happens there. And then finally, small caps IWM. Didn't break the low of the range. Yesterday's low 209.05, so that barely held. And then the nice bounce off of that today right into the downtrending ADMA. You've got the green line, the 21 just broke through the 50, so that's a negative also. And the red line, the 50-day, has rolled over, also a negative. But It's day one of a recovery. Let's see what, and also we've been really underperforming for 3 weeks. You can see from a relative strength standpoint on the small caps. We'll see where we go from here. Ideally, we trend sideways to up and let the MAs repair themselves via stronger price action. So let's take a look now at some of the beaten down sectors and how they responded. Let's get this back to regular price. So let's look at what rebounded the strongest today, and that is going to be the banks. So let's take a look at XLF. This is a broader financials, and you can see it looks a lot like the small cap index as far as being at the bottom of the range and just bouncing up into declining moving averages. Again, this is how bases are formed, and we'll just keep an eye on what's going out. Again, we're not going to predict. We're just going to keep an eye on it, observe, interpret, and react. Let's hone in a little bit quicker to the banks. Here's the big banks. That's a bounce off the 200-day moving average. That's a logical place for this index to bounce. Let's go to regional banks, KRE. Same situation, bounce off the 200-day moving average. Second worst index has been energy. Not quite to the 200-day. Big waterfall really over the last week, and horrendous relative strength over the last 4 weeks. This is a normal place for it to bounce along this 46 area, which was the prior bottom of this base that we had a failed breakout from. So see if the energy stocks can build on this little bit of a bounce. Not really as concerned about that, about banks and energy. Those are not two of the ponds that we typically fish in. Let's take a look at industrials, which had shown, really a mixed bag, but an ugly gap down on Monday and a nice recovery today. Moving average is not configured the way we wanted to, but this is just really, it's either healing itself and is going to form the right side of a base, or it's going to break down below yesterday's lows. And I can't reiterate how critical yesterday's lows were. Now, during the weakness, we noted that there had been money flowing into staples, and the fact that staples lagged today is actually a good thing, because that implies risk off is when staples rally. You can see the big relative strength over the last week. During risk on, money doesn't go into the safe sectors. It goes into the sectors where you can get a little bit more beta, and that is not staples. So staples lagging today is no big deal. The other recently strong defensive area was utilities, and utilities had a rough day yesterday, and some further weakness on a relative basis today. You can see while they were up, the relative strength line has dropped for 2 straight days here. XLRE, which is where a lot of money has been flowing recently, and I'm starting to think that XLRE is acting more like a growth area, with the fact that the new all of the pension money and the private equity money that's flowing into buying buying up real estate and renting it out could be supporting this sector. But anyway, just a pullback and a reclaim of the 21, and now back near all-time highs. XLRE, the real estate sector, looks pretty darn good. So let's take a look at tech, XLK. This looks a lot like the QQQ. Big strength in tech, hard 3-day pullback. One closed right on the 21 and a bounce right off of there. So again, as long as yesterday's lows hold on XLK, the Qs, and the S&P 500, that makes up a good bit of the market, and we could be in for some decent shape there. Now, the big thing that we want to look at is the big cap FANG tech earnings going to come out over the next couple of weeks, and Netflix kicked that off today. And Netflix was initially down after hours, down near 500, but it's reclaimed all that and is about right where we closed. So EPS 87% gain on earnings, and can't complain about that. So I don't have the sales figures aren't updated yet. I'm not sure what they were, and I don't know what their guidance are, but I imagine their guidance is good enough for Wall Street if we're right at where we closed. So Netflix also has the fact that they're wanting to get into video game streaming. So I'm not sure exactly how that's going to work. But the key right now is that it rallied, pulled back, held where it needed to, the 21-day exponential moving average, and now with earnings, it's holding right where it needs to. A move above today's high after an earnings report would be very bullish for Netflix. So I'm going to set an alert there right now, 536.64. 536.65. Okay. So that's earnings being kicked off at Netflix. Another one that we own but got didn't really get stopped out on, but we had no profit cushion going into today's earnings. So we sold CMG late last week on some market weakness, up 4% after hours. So that's something we'll be keeping an eye on tomorrow. This is definitely a restaurant leader. Now, something that we bought today, you're aware of, if you follow me, of the Dirty 30 list, one of two stocks that were the first ones to make new highs off the Dirty 30 was Dynatrace. I didn't get it when it initially broke out, but it gave me a nice 5-6 day pullback here on light volume. An undercut of the 21, actually 3 closes below the 21, not a surprise considering what had been going on with some weakness in leaders, although they held for the most part right around this 21-day exponential moving average, and then a move back above it today on average volume. Compare that volume to the sell-off volume. I'm pretty happy with this. We took a position in this as it broke back above the 21 today. Also in the last 2 days, I mentioned adding QLD. We got stopped on half of our DocuSign last week during the pullback, added it back yesterday as it broke back above this high and the ADMA. And DocuSign at all-time highs. As far as I'm concerned, this is the number one stock in the market right now. Look at the big blue volume bars compared to the low volume pullback bars. This thing just looks great. And we also, net had a downgrade today. Initially, it was down over 2%. Thank you very much. That was a bounce off the 21. And we added with the strength off the 21. On the break and close of the 8 last week, we sold half of it, so we got that half back, 3% lower than where we sold it at. So I'm quite okay with that. So from an exposure standpoint, we came into the week with an adjusted beta right over 1.0, which is about in line with the market, and we're about 1.25 now with the things that we've added over the last couple of days. And we're not guessing. Let's go through a quick portfolio update here. I already showed Docu. I showed Net. We also own Lulu. Lulu, very nice. Perfect bounce off the 21, just like you'd want to see yesterday, and following through and look at the volume patterns. This is very bullish. Lulu in mode INMD held at the 100, just where we needed it to. And all-time high close today, so that's looking fine too. PayPal bounced right where we needed it to yesterday. On quick undercut of the 21, back above it. Earnings in 8 days, but it's right back above the pivot area. UNH, this is our slowest moving name. I liked how it reacted to earnings here. Didn't really like yesterday's action, but it reclaimed it. It's above the 21 as long as it relative weakness, in other words, over the last 2 days. If that continues, we'll get stopped out below yesterday's low. But if it starts showing relative strength, I'll be just fine with this. And I showed DT. We also own CrowdStrike. Zscaler, its sister or cousin stock, has been acting slightly stronger than this, but we're still holding right along this 21, and that's fine. And we also own Apple, which had a rough day yesterday, but recouped basically all of its losses, and we've got earnings next week on Apple. Note the relative strength on Apple. We took some of this off last week when it ran into this 150 Livermore and a half area. Then it pulled back with some volume yesterday, but again, held to 21. So we didn't get overly bearish. We kept our beta right around 1 because leading stocks were not showing the weakness that the indexes were, and that's our focus on leading stocks. And that's going to wrap it. As always, like to hear from you. I'm on Twitter at @DVandenbord, email Don@revereasset.com, or phone 855 Real Wealth. Tim will have Wednesday's video. Hunter will have Thursdays, and I'll be back on Friday with the updated 21 over 21 list. So wrapping up Tuesday, July 20th, this is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.